Okay, let's just cut right to it. What if one single decision, the one you're probably losing sleep over right now, could literally multiply your net worth by 40 times? Yeah. Today, we're tackling what is probably the biggest financial question for an entire generation.
No, seriously, that is not a typo. 40 times. That's the mind-blowing difference in net worth between the average homeowner and the average renter. It's a number so huge, it doesn't even feel real, right? But it is, and it's at the very heart of the dilemma we're breaking down today.
So this is the big one, the $420,000 question. Do you take all the cash you've painstakingly saved and dump it into a down payment on a house? Or do you keep feeding the stock market beast, hoping it grows faster? This choice could genuinely make or break your financial future. So we're going to dig into the brand new 2025 data and find the real answer.
But before we get to the playbook, we've got to be honest about the situation on the ground. Let's be real for a second. If you feel like the game is completely rigged against you when it comes to buying a house, well, you're not crazy. The numbers are just brutal.
Just look at this stuff. I mean, the median homebuyer in the US is now 56 years old. 56! And first-time buyers? We're a shrinking minority, making up less than a third of the market. For a whopping two-thirds of young people, housing is their number one, top of the list, keep you up at night financial stress. And oh yeah, on top of all that, nearly half of us are still dragging around a $30,000 student loan balance. So yeah, saving for a house can feel impossible.
So is it any surprise that almost half the country has basically given up and now thinks owning a home is a complete fantasy? I mean, looking at those stats, can you even blame them? But here's the thing, and you've got to stick with me on this one. There is a massive, massive opportunity buried in all this chaos that almost nobody is talking about.
All right, this is where things start to get interesting. We are about to completely demolish the single biggest myth that keeps people trapped in the rent cycle for years longer than they need to be. I'm talking about the myth of the 20% down payment. Yeah, everyone thinks you need 20% down, right? It's what your parents told you, it's what you read online. But look at the actual data of what real homeowners do. Nearly 60% of people who successfully buy a house put down less than 20%. The people actually winning the game aren't playing by that imaginary rule.
So here's the bottom line. These low down payment options, they're not some weird, rare thing. They're totally normal. You've got FHA loans that let you get in the door for as little as 3.5% down. Even conventional loans go as low as 3%. In fact, the average first-time buyer today puts down just 6%, not 20, 6. Let's see what that looks like in real money.
Okay, let this sink in. The myth, the thing keeping you on the sidelines, says you need $84,000 in cash to buy a typical home. The reality, for the average buyer, is closer to 25 grand. That is a $58,800 difference. That's not just a little bit of money. That's life-changing cash that you could be putting to work for you instead of just letting it rot in a savings account.
Okay, so this is where the real debate starts, right? Because now you're thinking, okay, I don't need 84 grand, but should I even buy a house at all? Or is it actually smarter to just take that 25 grand, keep renting, and throw everything into the market? Let's run the numbers.
All right, let's play this out. Imagine you've got 50 grand saved up. Good for you. Now you have two choices. Option A, you buy that $420,000 house. Your mortgage is about $2,800 a month. Option B, you keep renting for $2 grand a month, you invest that initial 50 grand, and you also invest the $800 you're saving every month. So what happens after 10 years? Well, with the house, your equity is sitting pretty at around $242,000. Not bad. But your investment portfolio? Whoa, that's worth over 350 grand.
So on paper, it looks like a slam dunk for Team Invest, right? You've got a way bigger pile of cash. Case closed. But not so fast. There is a giant, gaping hole in that argument. It's that third bar. In those 10 years of renting, you also lit $240,000 on fire. That's $250,000. Poof, gone. Vanished into your landlord's pocket, building zero wealth for you. And that hidden cost, well, it changes absolutely everything. And that brings us right back to that insane 40x wealth gap we talked about at the beginning. It's not just luck, it's not just that home prices go up, it's all about a powerful psychological trick that homeowners have on their side. First off, let me give you a quick and dirty tool you can use like right now on your phone. It's called the 5% rule. Just take the price of a house you're looking at, multiply it by 0.05, and then divide by 12. For our example home, that comes out to about $1,750 a month. Now,
If you can rent a similar place for less than that, renting might actually be the smarter move. But if your rent is more than that, buy-in starts to look really good. It's a great little back-of-the-napkin way to see if you're in the right ballpark.
But really, even that rule doesn't capture the bigger picture. It all boils down to this one simple, powerful idea. Every single time you make a mortgage payment, you are paying yourself. You're building your own wealth, your own equity. But every single time you write a rent check, you're just paying someone else's mortgage. You are building their wealth. So you see, this whole time we've been asking the wrong question. The debate isn't about choosing one or the other. It's not buy or invest. That's a false choice. The truly smart play, especially for our generation, is a hybrid strategy. It's not either or, it's both and.
And here's the part that should get you really excited. As a millennial, you have some serious advantages right now. First, you've got time on your side. Decades of it to let your investments grow and ride out any bumps in the market. Second, your income is probably going to go up from here, which makes that fixed mortgage payment feel smaller and smaller over time. And third, rates. Yeah, they're high now, but what goes up must come down. You can just refinance to a lower payment in a few years. Okay, so you want the playbook? Here it is, the both and strategy. It's super simple. Step 1, you're going to use one of those low down payment loans to get in the game now and stop the bleeding from rent checks. Step 2, you take that huge chunk of cash you saved, that 50 grand or more, and you put it to work in your 401k and your brokerage account. And step 3, the pro move, if you can, house hack. Rent out a spare room. It could cover a huge chunk of your mortgage and put your wealth building on hyperdrive.
All right, theory's cool, but let's make this real. What can you do, like this week, to go from just thinking about this to actually making progress? Here's your action plan.
Okay, pull out your phone, take a note. Here's your 5-step action plan. Number 1, find out what your real down payment would be. Forget 20%. Number 2, run that 5% rule for houses in your own town. See what the numbers say. Number 3, be honest with yourself about your timeline. If you think you'll move in 2 years, keep renting. 5 years or more, buying gets really compelling. Number 4, and this one's huge, get pre-approved for a mortgage. It's free, it doesn't commit you to anything, and it tells you exactly what your real budget is. And finally, number 5, the golden rule. No matter what you do, you never stop investing. Period. So if you take one thing away from all of this, let it be this. The question was never which one is better. The best investment strategy, the one that builds real, lasting wealth, isn't choosing between real estate or stocks. It's doing both. You buy a home for stability and that forced savings account, and you invest in stocks for that aggressive long-term growth. That is how you win this game.
Look, I get it. This is a huge, scary decision, but you've got the framework now. You have the real numbers. You know the biggest mistake is just doing nothing while you keep building someone else's wealth. So I really want to know. Drop a comment below. After seeing all this, are you team buy now or team invest first? And what's the one thing that's still holding you back? If this helped open your eyes, do me a favor and hit that like button. And make sure you subscribe, because every single month you wait is either equity you've lost or compound returns you can never get back. Choose wisely. I'll see you in the next one.